Hello everyone. If you're watching this video right now, chances are many of you came here because XRP's recent price action has been incredibly confusing and frustrating. Today, I want to take a very deep dive into the most important period in February, the point where the most trading accounts will be divided. That is week 3 of February, from the 12th to the 18th, and we'll be analyzing XRP's trading and investment flow in detail. Now, when I say week 3 of February, I'm not talking about the usual calendar-based week. This analysis is not based on a standard calendar. It's based on Vedic astrology, where weeks are defined by shifts in planetary energy rather than Monday through Sunday. In Vedic astrology, a week is not simply 7 days on a calendar. Instead, we group periods by moments when planetary movements and angular changes alter the market's character. So the period from February 12th to 18th, what I'm calling week 3, should be seen as a completely independent phase, even if it appears to fall within a normal calendar week. Especially during this period, pressure from Mars and Saturn intensifies at the same time, making volatile assets like XRP far more vulnerable to sharp swings and large-scale liquidations. That's why, on the calendar, this may look like just another ordinary week. But from a Vedic astrology perspective, this is the most critical turning point dividing the entire month of February. If you understand this framework, you'll clearly see why price direction becomes so violent here, and why confusion is almost inevitable for most traders. Before we begin, let me be very clear. This video is not a buy or sell recommendation. It is an analysis of market flow and risk zones based on Vedic astrology. If you're using leverage, please make sure you only use this as a reference within your own risk management rules. Alright, let's get straight into it. If I had to summarize week 3 in one sentence, it would be this. The primary direction is downward, but with a very strong rebound in the middle. This sentence is extremely important, and I'll explain exactly why. The core of week 3 is not sideways consolidation or a bullish reversal. This is a volatility explosion zone built on a bearish foundation. From a Vedic astrology perspective, Mars is not pushing price upward, it's working to break support levels. Saturn, meanwhile, suppresses momentum every time price tries to rise. On top of that, Mercury steps in and continuously creates optical illusions, making the market look like it's recovering when it's not. So the typical flow of this period looks like this. Price looks like it's going up. People enter long positions. Support breaks. Then, after a massive shakeout, a rebound finally appears. In other words, this is a downtrend that feeds on long positions. Now let's break this down day by day. First, February 12th. This day may appear very quiet. Small candles, low volatility, and many people start thinking, maybe the market is stabilizing. But this is not stability. This is energy compression before a drop. This sideways movement is not a bottom, it's preparation for what comes next. So on the 12th, the best response is not aggressive new entries, but reviewing existing positions and reducing leverage. Next, February 13th. This is the most important and most dangerous day of the entire week. Here, the direction is no longer ambiguous. The direction on the 13th is down. Even without any major news, sharp drops can occur, and there is a very high chance of cascading long liquidations after support breaks. What you really need to watch out for is the small rebound that appears early in the day. This rebound is not a bullish signal. It's very likely a fake move designed to attract more long positions. So on the 13th, long positions are extremely unfavorable, and relatively speaking, short positions have the advantage. That said, this is not a day to chase big profits. The priority is protecting your account. Now let's move to February 14th and 15th. This is the section that confuses most people. After the sharp drop on the 13th, a rebound is almost guaranteed. And when people see that rebound, they start thinking, maybe the 13th was the bottom. This time it's different, but this rebound is not a trend reversal. It's simply a rebound within a downtrend. From the market's perspective, this phase exists to shake out some shorts, pull longs back in, and prepare for the next move. That's why long positions here, unless they're very short-term scalps, carry significant risk. From a risk-reward standpoint, this often becomes a favorable re-entry zone for shorts. Now, February 16th. This is the day when the most people can get wiped out. and at the same time, the day when the largest rebound can occur. You need to understand this structure very clearly. The primary direction on the 16th is still down. However, after one more strong push downward, there's a high probability of a powerful technical rebound. This rebound is not the start of an uptrend. It's a liquidation-driven bounce that happens after most longs are gone and shorts become overcrowded. That's why the worst possible decision on this day is saying, "It's fallen enough," and opening new short positions at the bottom. Bottom shorting can be the most dangerous mistake on the 16th. On the other hand, after a clearly confirmed sharp drop, a very short-term long trade becomes one of the few acceptable long opportunities of the week. But let me stress this again. This is not a trend long. It must be quick, disciplined, and without greed. Finally, February 17th and 18th. The rebound that began on the 16th starts to lose strength here. Volume decreases, and upward momentum slows. That means downside pressure can re-emerge. So any long positions taken on the 16th are safest when closed before the 17th. After that, the structure shifts back into a short favorable environment. Let me summarize this entire period in one sentence once again. Week 3 of February is a downtrend. There is simply a powerful rebound embedded within that downtrend. So the strategy is very clear. Short positions are the base strategy. Long positions are only valid briefly after the sharp drop on the 16th. Then the bias returns to shorts. This week is not about luck. It's about execution and restraint. If you rush, you get wiped out. If you wait, opportunities come to you. If this video helped you, please consider hitting the like button and subscribing. It really supports the channel. In the next video, I'll break down the most dangerous time windows and the best entry moments within this same period, with a much more practical, execution-focused approach. Thank you for watching. Please don't overextend yourselves, and always prioritize protecting your capital.